And thanks everybody for coming today. Just to give you a little on my background, I've been working with employers for about the last 18 years in a number of areas of employee benefits, primarily specializing in flexible benefit plans, COBRA administration, and then the commuter benefits, which kind of fit in under our flexible benefit plan administration. When I was first approached about attending, I jumped at the opportunity because I feel not only is this a great tax savings benefit that an employer can offer to its employees in the way of tax-free commuter benefits, it's also a wonderful way to help in some current issues that we're facing with rising energy costs. It's a great energy savings method, as well as to help protect the environment. And we're going to talk about that as we go through the presentation. So why is considering a commuter benefit plan important, a pre-tax commuter benefit plan? Well, first of all, more employers are offering this benefit. It's actually becoming kind of a competitive benefit. So when an employee might be considering coming on board with your organization who is used to having this type of program through their prior employer, well, that might be one of the reasons that they put a check mark on your side of the ledger that you're an organization they might consider because you do offer this type of program that they're used to having. Certainly it saves taxes, and being an old benefits guy from way back talking about flexible spending accounts, I often would approach this from, well, it's a tax savings benefit. You can get more bang for your buck by using pre-tax dollars to pay for these expenses you're going to have anyway. You have a commuting cost, so why not use pre-tax dollars? But we now also have not only tax savings for the employees, but for the employers. A sponsoring employer, whether they contribute to the plan or not, that any contributions the employer makes toward an employee's commuter benefit would not be considered taxable income as long as it's within the prescribed limits. And then if you have employees contribute on their own to the plan, that money is not taxed on the employee side, or no payroll taxes on the employer side. So by pre-taxing these contributions, it's not subject to federal, state, or FICA taxes, Medicare B taxes on the employee side, or payroll taxes on the employer side, the FICA, the Medicare match, as well as unemployment taxation. So a pretty good deal for everyone. It also saves energy. Obviously, if we can get more people commuting using mass transit, riding bikes, using van pools, it's going to reduce the number of cars on the road. So we're going to save energy, less fuel consumption, as well as being an environmental savings. One reason you might want to consider this is if your company is coming out with green initiatives, you have environmentally conscious employees. Well, as an employer, you could say, hey, we're environmentally conscious too because we support a commuter benefit program. And so what a great way to promote not only your organization but help save the environment. So what's the value of all this tax savings to an individual that participates and to an employer? Well, we'll talk a little bit about the power of pre-tax, and you've probably seen examples like this with flexible spending accounts before. But we're just going to use an example here of a regular employee, somebody that makes $30,000 a year, that's $2,500 per month, who spends $100 a month commuting to and from work and purchases either direct fare or purchases a transit pass themselves on an after-tax basis. So in that example, well, we start with $2,500 of gross salary. We have $550 of federal and state taxes, the FICA Medicare B of $191, leaving a net pay of $1,759 and a net spendable income after paying for the transit expense of $1,659 at the end of the month. And that $659 is to pay all the rest of the expenses, the groceries, the rent, the phone bill, the electric bill, etc. Hopefully there's a little money left over for that individual to go to the movies or something. But now we're going to bring a pre-tax plan on board with this employee and show the difference. So we're going to slide that $100 monthly transit expense up, and we're going to deduct it off that gross pay of $2,500. And in effect, what we're doing is we're reducing the gross taxable salary from $2,500 down to $2,400. So we're going to be taxed on a lesser amount. That's a pretty good deal. By being taxed on a lesser amount, we're reducing our federal and state taxes from down to $527, our FICA Medicare B tax down to $184. Remember, we paid our transit expense with pre-tax, so we don't have to deduct it off here at the bottom. So that leaves us with $1,689 in spendable income. So that's actually a $30 increase. This is a before and after scenario here, and you compare the difference. The taxable income was $2,500 before, it's down to $2,400. Taxes reduced in both the federal, state, and Medicare. And bottom line, the spendable income increased to $1,689. That's a $30 monthly increase, or $360 more in that individual's pocket each year by pre-taxing that expense. Remember, their expense is exactly the same. They just get $360 more dollars of spendable income each year by pre-taxing that contribution. So it's a valuable benefit for the employee, no doubt. For an employer, maybe you have 20 employees who participate at $100 each per month. That's $2,000 a month that is not considered taxable income any longer, $24,000 per year. And because the employer does not have to pay the FICA or Medicare matching payroll tax, it's $160 monthly savings to the employer, $1,920 per year. Not quite as big a bang for the buck for the employer, but that could offset the administrative cost of the program right there. If you would consider it's going to take somebody in the organization, you know, an hour a month to administer the program, well, that's probably worth $160 to administer the plan. So you could certainly make the case that you're offsetting your cost of internal administration. Certainly if you're outsourcing the administration to a third party, that can offset some of the administrative costs there. So just some food for thought. Another great new benefit that was provided as part of the $700 billion bailout bill, there's been a cadre of folks in Congress for the last 12 years who have been trying to get a commuter bicycle benefit passed. And as kind of a silver lining to that $700 billion bailout, they were able to get the commuter bicycle benefit tax or tax-free benefit into the federal law. So effective January 2009, an employer can offer an incentive for those who commute to work using a bicycle of $20 per month to cover the cost of obtaining a bicycle, storing it, maintaining it, having a helmet, etc. We may see more and more bicycle commuters as a result of this, and more companies interested in encouraging bicycle commuting. Okay, so in summary, tax-free benefits are becoming a standard workplace benefit. It helps employees save money, reduce their costs for commuting to and from work, and certainly supports the green initiatives of any employer.